Today we're going to talk about some strategies as a property investor when interest rates are stubbornly high. This week the Reserve Bank they kept interest rates on hold, but they've also sent a clear message that interest rates will not be dropping before Christmas and maybe interest rates only coming in the new year. So what does that mean to you as a property investor? Well, you've got to have the right strategy to be able to maintain and hold those properties. We know in the market at the moment, we've got a two-speed economy with properties. We've got Perth, Brisbane, Adelaide performing really well. We've got the other cities performing pretty flatline. So it's a good time in some capital cities for capital growth, but we need to be able to hang on to these properties and not being forced to sell because holding costs are too high. So a couple of tips. Number one, make sure, because you're going to need to hold for this next period of high interest rates, is get hold of your finance broker. Find out if you're getting the best rate you can and most efficient loan that you currently have. There may be an opportunity to refinance if it's the right thing for you. Number two, after speaking to the broker, the recommendation is to phone your current lender, ask for their retentions department at the bank. The retentions department. When you speak to them, they have the authority to give you a better rate without losing your business. Their job is to retain your business. Therefore, they will try and help you where you can. So get them to try and sharpen and reduce your interest rate when you're talking to them. They don't want to lose your business. That little tip alone will save you thousands across your mortgage if you can get your bank to just come down a little bit. Number three, some other options would be, can you put the rent up? So can you increase your income to cover those high interest rates costs? So try and put the rent up. Another option to talk about to your broker or to the bankers, if you're paying principal and interest on your investment property loan, can you move to interest only for a period of time just to help you with the cash flow? Something else that's really important is to make sure that you are factoring in a buffer. So you've got some buffer funds in case of emergency. So don't just keep it, from hand to mouth each month. You've got to have a little bit of a buffer. Speak to the broker, see if you can draw down some equity. What can you do to get a little buffer? Another thing to potentially do is speak to your accountant about doing what's called a PAYG tax variation. That will help on your cash flow month to month, because what it means, instead of waiting till the end of the financial year and getting a lump sum back as your tax savings from the investment property, you can get that back each time you get paid. So if you get paid fortnightly, you'd be getting your tax rebate coming every pay slip. So a couple of tips there today. The most important thing is to try and plan. We're going to be in a period of time now where interest rates will be high for what we're used to. And the most important thing is that you plan to have enough cash flow to hold those properties. I hope that's been of some help today. If you would like to discuss in any more detail, please reach out to us at Property Powers. Thank you.